Today, I'm going to cut through the noise and break down a highly debated topic: whether you should buy or lease your next vehicle. Whether you're cutting costs, accumulating wealth, or preparing for retirement, this decision has an impact that can last a lifetime. This choice can affect not only the size of your nest egg, but how long that nest egg lasts. And be sure to stick around to the end, where we're going to go through a 10-year case study with actual numbers, in addition to a framework that you can consider if you're faced with this decision. Now think about this. If you've gone through the process of actually having to buy or lease a car at some point, you might have come out of it shocked to find out exactly what expenses and costs are associated with the transaction. And in some cases, the real costs associated with leasing only become clear once you're going to sign the paperwork. Lease agreements can be filled with terms and conditions that quietly add up and might only be noticeable to those who are actually counting their dollars and cents. Some of the expenses that are often overlooked are the mileage limits and the charges that come along with going over, in addition to the wear and tear charges that can add up over time. You might find yourself excited at the thought of leasing a new vehicle, only to find out that every mile over the limit could cost you somewhere between 10 to 50 cents. On the flip side, unused miles don't get you any money back, which could lead to underestimating what your actual driving use is and put you in a pretty precarious position. Potentially more shocking is the thought of wear and tear costs, which could end up being another surprise expense. When you return your leased vehicle, typically the dealer will inspect it for anything beyond normal wear and tear. This can include things like scratches, dents, stained seats, or even worn out tires. Things that might seem like minor issues to you could end up costing over hundreds, if not thousands of dollars in repairs. You could even find that your dealer hits you with a disposition fee at lease end, often a few $100s, just to simply clean and prepare the car for resale. Another important factor to consider here is ownership, or in this case, a lack of it. A lease is simply essentially renting out a car between 2 to 4 years where you have nothing at the end of that term. When you reach the end of the term, you return the car, you've built no equity, and you have no asset left over. With regards to lease payments, this takes into account things like depreciation, or how much value the car loses over the term of the lease, in addition to potential dealer charges and profits on top. Unfortunately, typically new cars face the fastest decline as far as depreciation is concerned. So if you continue to lease brand new cars over time, you could end up finding yourself in a rut. And while you may be aware of all of these caveats, something that I see that is often less discussed is the fact that flexibility can be limited during this time. Whether it be your financial situation changing or simply needing to get into another car, ending a lease early can be an extremely expensive situation. Early termination fees can end up being thousands, if not the entire balance remaining on the lease. And while you might be watching, thinking that this can never happen to you, the fact of the matter is, the lack of flexibility could present a problem if faced with something like medical issues or a changing lifestyle. And beyond the financial aspects, there's an emotional component to consider as well. Lease payments are a recurring obligation, where each payment you make goes towards something that you don't actually own. For those of you who prefer more predictability and control, this situation can end up feeling very burdensome, especially for those who crave stability. And when you take a step back and look at the big picture, every dollar that you're spending towards that lease is a dollar that's not working for you in retirement. Money can be tied up in ongoing payments and fees, which could otherwise have been used for building retirement, spending time with family, traveling, or buying other things that you enjoy. And while this situation can seem less than ideal, there are factors on the other side that I want to cover that are a bit more optimistic. In certain situations, leasing can offer a hassle-free way to drive a brand new car with the most updated technology and safety features, in addition to the ability to get a new one when the lease is over. The appeal is clear. You get access to a late model vehicle without a large upfront investment, in addition to the fact that you don't have to handle repairs and can eventually shift into a brand new car after the lease is up. This sense of convenience can be especially attractive if you don't want to have to deal with the headaches that could potentially be associated with owning a car long term. Maybe your lifestyle doesn't require an overwhelming amount of travel, and the other benefits associated with a lease make sense for you. This brings up my next question. If leasing can chip away at your savings, and you don't actually have an asset at the end of the lease, does it make sense for you to buy? First things first, owning a car can come with some sort of financial advantages. When you buy a car, every payment that you make as far as financing is concerned goes towards building equity in the asset. This means that once you pay off the loan, you actually own the vehicle. That equity is not just a number on paper. It actually means something, whether that means trading in that car for a new one later on, selling it, or even just continuing to drive it and not having to make additional payments through the lifetime of the vehicle. In addition, you don't have the mileage caps that you would if you were to lease the vehicle. So if your lifestyle consists of frequent travel, this might be a better option for you. And the reality here, the thought of a higher upfront payment and potentially higher monthly payments could be quite daunting to those of you who are on a tight budget. But the fact of the matter is, when you're done with those payments, you now own an asset, payment-free, which could last for several years. And this could end up resulting in some financial breathing room. According to Consumer Reports, this is one of the most significant advantages of owning a car, whereby you have an asset at the end of the deal as opposed to continuing payments that you would have with a lease. Now, let's take a look at how these details actually translate into real dollars over time. To get a true sense of what's at stake here, it helps to take the cost of a lease versus the cost of buying a car over an extended period of time. Let's take a look at a $70,000 car, for example, and assume that you lease this vehicle for three-year terms and you put zero money down. The monthly payments could end up resulting in about $1,125 per month, and the cost of each 3-year lease is about $41,000. Over the course of that 9-year period, your total payments and fees could end up tallying to about $123,000. On the other hand, if you were to buy and finance that $70,000 vehicle, and let's say you put $2,000 down at a 5% rate of interest on a 5-year loan, those payments could end up being about $1,280 per month. However, your total spend would be about $77,000. So all in, a rough estimate shows about a $46,000 difference between the two situations. Once that loan is paid off, you now have a payment-free asset for the next 4 years. Assuming all of the variables being equal, like the cost of fuel and insurance, that's quite a savings. And let's not forget, you could end up having to pay for routine repairs and maintenance during that time, which for these purposes we'll estimate to be about $15,000. At the end of the day, you still end up making out better purchasing the vehicle. And although depreciation can be a real factor to consider, it doesn't tend to fully erase the thought that ownership in a vehicle could be the better choice. As I said earlier, new cars tend to erase value rather quickly when coming off the lot. According to Investopedia, on average by about 15 to 20% in the first few years. And in accordance with Consumer Reports, vehicles tend to lose about 50% of their value over their lifetime. With that said, your $70,000 vehicle could end up being worth about $35,000 over the course of 10 years, depending on how well you maintained it and how many miles you've driven. But as always, we need to consider potential trade-offs here. Buying a car means you might be taking on additional risk as far as the cost of repairs and maintenance as the car ages. In addition, you might not have access to the newest technology or the smoothest ride, as you're holding on to the same car for a number of years as opposed to leasing a new vehicle. And I prefer not just to look at the difference between leasing and buying as a dollars and cents decision. Obviously, we have to take a look at financial stability in the long haul, in addition to your level of comfort. One thing I will say is that I believe it's worth considering what matters most to you when making this choice, factoring in things like your driving situation, your life habits, and your overall financial well-being. So let's break down the exact framework that I use when trying to make the best decision for me. First, I start with a clear-eyed look at my own needs. I don't just boil it down to dollars and cents in the very beginning, but I understand how I want my life to function. What are my driving habits? What type of mileage am I putting on the car? Am I staying local or going for extended trips? And do I really need the brand new technology? If my mileage is on the lower end and I tend to stay local when making trips, maybe the lease makes sense. Next, what is my financial picture? What does my income look like? What are my expenses? And how is my overall budget? I actually take things one step further, and rather than just comparing leasing versus buying a new car, I take a look at leasing versus buying a car that is 2 to 3 years old. Then, I take a minute to reflect on my long-term plans. And when looking at the situation for me, I understand that a low level of stress could be added into my life by leasing when having to stay within a certain mileage limit or having to return the vehicle in perfect condition. For some people, these worries are quite minor. But for others, they can end up being a constant source of anxiety, especially if finances get tight. Owning a car can sometimes bring you a sense of calm, where you know that it's yours. If things change, you can make change because you have that asset, and you don't necessarily have to worry about it being in perfect shape. And this sense of control can sometimes end up resulting in freeing up mental space and having more time to consider doing things that you want, whether it's focusing on your family, on your health, or even figuring out your next big trip. To make an informed decision, consider gathering all the facts and taking your time. And if you're still unsure after you've gone through all these steps, take a minute to speak with someone that you trust, whether it's a family member, a friend, or a close advisor, to bounce some ideas off them. Sometimes you find that the answer is not purely financial, but more so what aligns best with your goals and values. And as you weigh your options, at the most basic level, remember the two numbers. The difference between buying versus leasing over the course of 10 years, in addition to having equity in an asset when you're done. Although leasing a car could end up in lower monthly payments, at the end of the day, you don't own the car. And although when making the decision to buy a car, you could end up with an asset at the end of the term, you don't necessarily have the newest thing out there. If you're looking for more information preparing for retirement and wondering what other regrets might retirees have, check out our next video here.